the Hertz story really does strike me as one that should just be a red flag for investors who are trying to trade in these markets. It feels irrational. It feels like early 2000 or late 99 to me, as though just sort of out the window, any kind of sensibility. But give me your thoughts on kind of the frothiness in the market here.
It's a great question. I've been talking about that to my clients for over the last week. You know, Chesapeake Energy was an interesting one as well. There's a number of bankrupt companies that rallied, but I got a story that tops that. There's a ticker symbol, DUO. It's a company called FANG DD. It's a Chinese real estate company out of Shenzhen. And this stock has never really been traded above $10. Earlier this week, went from $10 to $130 and round tripped back within about 24 hours, within 2 trading sessions, because market gamblers, novice, ignorant market gamblers thought this was FANG. They thought it was the Microsoft, or they thought it was the Facebook, Apple, Amazon, Google combination. And that you see stuff like that. You're right. It's irrational exuberation. It's you get moves like this in the market. It's forming a top. So it's not uncommon to see the market move differently, roll over a bit after the Fed, or melt up after the Fed. So we've already had the melt up, and now it's coming in. Volatility is picking back up, and there's some news headlines, as you mentioned. Is the virus coming back? I have another one I'm looking for too. Next week is quadruple witching. Quadruple witching with the stock markets, when the futures and options, as well as options on stocks, all expire once. And as this market has melted higher, retail investors and even just managers, they're buying calls. They want more leverage in this market. They're buying those calls, and there's record open interest in calls in the S&P. And when those calls are bought, somebody has to sell it to them. It's the market makers, it's the institutions. And so they sell those and they lay off the risk by buying stock. All of this has to unwind. And then you got the quarterly rebalancing coming on the heels of that. So this is just getting started. And I think it's going to be interesting 2 to 3 weeks to go here for the end of the month.
So, and then, in the mix with all of this, and, when we think back historically to other periods where logic and fundamentals took a back seat, right, to emotion and momentum, it is the retail investor that gets drawn in. It is the retail investor that ends up holding the can almost every time.
Yes.
So, when you look inside the market here, though, you got to ask, okay, well, we know some things don't make a lot of sense. Bankrupt company stock shouldn't really have value. When it does, there's probably some risk behavior going on there. But I'm looking at Bank of America, hugely volatile. Its forward PE is still 17. Its current PE is 9. There are obviously places here that we can make a strong case are not overvalued. So how careful do you have to be in this market?
And that's another great question. I mean, really what you have to look at is don't get caught up in the exuberance. Pick your spots. I have a list of things that I'm looking at that where do I want to be a buyer? And that's what you want to do. When this market sells off, you don't want to be sitting there panicking, and you shouldn't have been forcing yourself long more and more leverage as the market rallied up. In fact, we rebalanced portfolios earlier this week. And then on top of that, again, you need to have your buy targets. Where do you want to be a buyer in this market? There's a lot of support here in the S&P at 3,000, and it's really trying to chew through it. We closed below there. The next big area I'm looking at is really the NASDAQ, which could ultimately go down to about 9,100 in the futures. So those are just broad areas of buying. But get in the stocks that names that you like. Costco's, the Targets, the Walmarts, and then you mentioned the banks have great value. J.P. Morgan, Bank of America. You know your levels that you want to be a buyer in. I love tech. I mean, there's going to be some better levels to buy tech. I mean, there's going to be some great levels to buy Apple over. I mean, Apple could really make a big run as a lot of this starts to cool off over the next 18 months. So just know your shopping list, and that's what's important. Don't get caught up in what's going on, what's the hot Hertz stock of the day or the FANG DD. Just again, know your shopping list.
And so when we look across, obviously we've seen a couple of places that investors try to use often as a hedge. Gold is one of them. Interesting action in gold lately. But give me your view of where you see that trading and where you see kind of the right range for gold.
I like gold. And one of my narratives has been for a very long time is you don't want to be a buyer in gold when everybody's screaming for it. That's when you want to be capitalizing on gold that you already own. And gold, it's struggled to break out. And another reason is because when the stock market sells off, there's just margin calls or there's liquidation. There's people raising cash. And then another fear here, though, is another wave of deflation. So deflation is going to hold gold back. It's been very constructive, and it had a very, very great technical pattern, an inverse head and shoulders. Through April, it broke out above, and it's building a really tremendous floor at 1680. So even on these sharp pullback days, it has never done anything wrong over the intermediate or long term. I like having gold in your portfolio, and there's some really interesting ways to play it. Just having some defined risk to the upside, and then you can even hedge your downside risk, because if it does break, you want to be able to either take some money off the table very quickly and have that hedge on there, or just capitalize the downside, because you've seen what happened here. In March 9th, gold was at 1700 before it really broke out above there. Crude oil broke down sharply after Saudi Arabia announced the price war, and gold fell 150 bucks. That's because of deflation. And the one thing that worries me right now about gold is the fact that silver, it's starting to show signs of moving, but silver is having a very tough time following through. I really want to see silver above $19 and $20 to really be the green light that gold is going to make a new record high. I believe gold's going to make a new record high, but the timing of it's really going to be more dependent on silver.
Interesting. And you mentioned crude as well, and obviously there are lots of kind of macro fundamental cross currents there, including that price war, which may or may not be behind us. We should remember, but just in terms of where you see crude going, and I guess we pin that to global demand scenarios, which still look kind of murky. What's your thinking on crude?
Well, China and India have been the huge buyers in driving this rally quite a bit. And you've seen production fall off. And OPEC had the pandemic cuts. They extended them for another month. And we've really seen a buy the news or buy the rumor, sell the news event here this week as WTI crude hit $40. And Brent is actually chewed back down through $40. So I think there's some room to come in. This market has it's running a little bit too quickly. But there's sort of if you're a near-term trader, there's a balance area that I'm watching about 36.5. And the longer it stays below 36.5, it paints a path down to potentially $31, $30 being a psychological area. So that's what I'm watching for crude. But one thing that I think is the elephant in the room is now that WTI is back above $32, and just in the front month, remember down the curve, it's higher. So the longer it stays above $32, a lot of these producers can start bringing production back online because they can now hedge it. So if we start to see production come back online, that's going to be very bearish for crude oil, but there's going to be a lot of hedges in place, I would imagine, at that time too. So it's going to be an interesting market. And then the last real question is this normalization? Is it going to stay, and is it going to continue? The Fed earlier this week really expressed concern that there's a long road ahead. And then now, obviously, you've mentioned too here that the viruses could be upticking a bit. So if a lot of that plays out, it does not bode well for crude oil in the very, say, intermediate to long term.
All right. Great to have your thoughts, Bill, always. Bill Baruch, president of Blue Line Futures. Thank you so much for that.